Just like with all the cryptocurrencies, we expect there's a breakout. It's not showing as strongly in Ripple as, of course, Ethereum and now Bitcoin, but it will materialize, we suppose, if all the asset class will be going higher. I don't want to go into the technical picture because we have been on this several times, but just to know where we are exactly, we are right here today. Okay, so the market a while back had concluded the wave 3 and the correction 4. All right, it is possible that that correction 4 is not yet complete. It is possible that it's complete and the market did a 5. Most probably did a 5. There has been an A and now there's going to be a B. We're buying into the bottom of that A all the way up to the neckline into B, comes in at 1.3. Okay, so if this is still a correction 4, that was a 4A, now we're having, that was a 4A, there was a 4B here, this would be a 4A, this instead of 5 will become 4B. We're still going to do a much stronger correction in A, B, C, shown here in white. So it's an A and a B and a C. So market already did an A, that B would only take us to 1.3 again, and then we do C again, and then we're moving higher. Of course, only bothered with buying into the bottom of wave A and going all the way to 1.3. It is possible that if all the crypto class will be moving much faster or much higher than this, then we will have a bounce at level A. We checked this yesterday. There will be a zigzag formation. Usually these kind of triangles, usually get a triangle at below necklines, and we would use, of course, a measure of the motive wave that took us right to the top of that triangle. This would be an A, and there would be a zigzag into B, A, B, C, and of course, if there's a good breakout with Bitcoin and Ethereum, we're gonna have a strong breakout with Ripple all the way to 1.9 and 1.7 and 2.3. So an entry here is really very important, and that will take us to the days 4-hour charts. So there's a question that Bitcoin should we commit? Yes, I think we should commit. We know now what we're stepping on, so we should buy market 58. That's my take again on it. Please do your own due diligence. We'd buy market 58, 0.15 of a coin. If we fall below 52,000, we close half of that 0.15 of a coin and add that half at 44,000 and 43,000. If the market doesn't fall to 52,000, we have the option to take profits at 53 or 52,900, or hold all the way to 70 and 75 and just let the position run. It would, of course, take at least 2 months, I think. Maybe it would rise sudden, so we cannot really know. Okay, so right back to Ripple here. Now that is the current 4-hour chart. This is where we are today. This market has already done a 1-2 and it's doing an internal 3-1 and an internal 3-2. It's a very, very congested formation because it is a shoulder at that next neckline. It will continue to congest, but we expect that it will break out higher. Remember, we just looked at that ending diagonal, that ascending triangle. I'm sorry, this is the same ascending triangle you have on the daily. You're looking at the upper boundary of this ascending triangle, and this is the lower boundary of that ascending triangle. Let's look at something bullish. Upper boundary of that ascending triangle, lower boundary, you're here buying at that green arrow going into the top of wave B, gonna be 130. So let's take a look at it on the 4 hours. It is 1.2893. Now this is a triangular formation. This is an ascending triangle, so the internal should be a fractal of that ascending triangle. Usually it's going to be an ending diagonal. Ending diagonals work, of course, in ABCs, 3 swings. We've just seen leg 1. We're doing that correction leg 2 at the neckline. Leg 3 should take us to the next neckline, sorry. So the next neckline is either this one here at level 4 or the one above that at level 2. We expect generally to see a strong breakout into 3. We're doing now 3-1 and 3-2. There's going to be a strong breakout into 3. That's 3-3. Then we have a very strong correction again back into 3-4 at that neckline, at the moving average, on top of the moving average, before we do leg C or leg 5, whichever you want to call it, to 1.3. So the market is always a buy at the lower boundary of these necklines and towards shoulder levels for the next neckline. We're currently, of course, at that lower neckline. So we have this zone very well segregated on the 1 hour charts. Now the market should no longer fall below level 1, definitely. So you're looking at 0.93 as a stop. That red arrow. Okay, whatever you're seeing now inside, there's a 1, 2, 3, 4, there's high degree 3, there's been an A and a B. There's still that C, it's not yet finished. We are advancing higher, but technically speaking, a wave C can test the top of 1. It is only 3-2 and can really test the top of 1. So you're looking at tests all the way down to 96 cents. You'll get to see these levels on the 1 hour chart. If this unfolds higher, because of course we are in an ending diagonal, now we understand that we are an ending diagonal, then if you still want to join the market, you want to buy as close to the neckline as possible, as close to that ending diagonal as possible, because in a realistic manner we will not be seeing 97 and these kind of top of 1 levels anymore, we think, and the risk of course is already contained. Okay, so let's take a look at the 1 hour chart. Even though we're still having negative momentum, we're having a zero line on the 4 hours because we are going to only be at or above the zero line once to take out that neckline. On the 1 hour chart, you find that we have an internal degree 1-2. This is a signal that they're doing an internal degree 1-2. Again, if we're not already in the market, I believe we're in the market as of day before yesterday. If we're not already in the market, we just want to buy as close as to the market as possible. This is only a confirmation to buy, really, and to hold our buys with a stop below level 1. Again, the stop is at that red arrow. The buys are at that green arrow. Okay, so the buys are very close to the current market level. It's around $1, $1.006, I would expect. The stop is at around 0.92. We are going, first target is going to be 110 and 111. This is that neckline. We're looking at 1.08 and 1.07. We're doing something like 7 and 8 cents before we have any correction, and then we're moving higher to 117 and then 128. Okay, so we're using, of course, 15-minute charts for entry. When we go live market, we'll just investigate if that 3-2 is finished or not. We have this segregation to work on. It's probably correct, we think. The market is simply trying to support on that next neckline without falling 50% between the two necklines. This is what the levels here are all trying to indicate. There is, of course, a 1-2, there is definitely a 3-1, there is an A and a B and a C, can do more, but I don't think we're going to be falling below 50%. And I think we are contained inside that ending diagonal. The market is a buy at current levels. Short-term traders should take profits at 1.0650, 138.2, at the most 1.09 and 1.08. 161.8 is 1.0950 and 1.0850 would also do. These are simply projections right from the market bottom all the way to higher degree level, internal 1 into 3, the current uptrending move, that is. So we're at 1.01 now, and we are supported at the moving average. So of course it's a bit choppy momentum in the shorter time frames because it is a triangular consolidation, but on the 1 hour chart you can see we have consistent positive momentum. So if you're not already in the market is a buy. Again, like we were saying, the risk is really contained, very, very, very minimal and contained to what we could be seeing if this develops in a strong breakout. So we could consider to buy current market 1.0122. Stop is right at that level here, 0.9350. First target is going to be at 1.08. We expect to see 1.26 towards the end of the month and 1.28 towards the end of the month, and then we will investigate if the momentum picture is strong. We could consider there's going to be a breakout. If the momentum picture is not really strong on the higher degree time frames, then we would consider that was just a leg B, like we've been showing on our analysis, and we're still going to get a leg C back inside that ascending triangle. All right, let's move on. We are looking at, we were going to move on to the remaining FX issues.